Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. So it looks like Bitcoin is getting a little bit of a reaction off of that local 618/ point of control of the local range. If we zoom in here for the Coinbase chart, that was a wick off of the point of control / 0.65, 0.66 golden pocket range. So that is seeming to have a bit of a reaction here. Just for transparency purposes, I did enter along off of that on the live when I looked down at my phone at that time. I'm still just chilling considering whether it holds, but my indicators aren't telling me to exit just yet. So let's go ahead and take a look. We're getting a previously we had a rejection off the 0.5 of this diagonal pitch fan to the upside, and we're getting a rejection down into the discount regions within that point of control / 618. So I'm here for it. Let's see what is going on in the high block capital. What is high block capital? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters are or have gotten burnt. So we are here to see this $145 million 100x pool get taken out, and it did get taken out as of yesterday. And that was about when I was considering what should I do with my long here. But the oscillators were still telling me on my stochastic array that we're good to go, so I've been holding it thus far.
Fatality.
And that's what happens with the 100xers when they over leverage. And if we go see the partner in crime up here at 29,753, that could be the target as of this moment. Coming up to that region will be where I reconsider what to do, moving stop losses into profit if we do go up to that region. Let's go ahead and adjust our vision to the time frame of the 7-day. The 7-day was giving me a little bit of pause here because you do have that larger liquidity pool to the downside here. So this imbalance is to the downside on the 7-day time frame, something to look out for. As you see clearly, there is a lot of longs building down in the 28.6 region. So are we getting a stop loss hunt before we go down into that region? That's what I am keeping my eye on. If we expand our vision to the 1 month, the 1 month is showing that there is still liquidity up in the 30,500 region. If we choose to go up in that region, to go down $1,000 from our current price range would take us to only $6 billion. And if we go up $1,000 from our current price range, it gives us $17 billion. So on the monthly time frame, we are imbalanced to the upside as of this moment in time. But if you look at these pools down sub 28K, there are double digits in the tune of $40 billion down in the 28.1 region, which also coincides with that golden pocket of the external range. If we're so inclined, there could be this inbound. So if we go up, hit the top of the range or hit the top of this point of control, get rejected and come back down here, I would not be surprised. Nothing lasts forever on either side of the equation, as we are clearly aware. And if we expand our vision to the 3-month, the 3-month time frame, also showing some liquidity down below. Of course, we've seen that for quite some time, building at below sub 25K. Are those untouchable positions of market makers as they see something bigger forming to the upside? I don't know. The 32K region also building some liquidity pools up above 32K, and the 28K region also showing those thick pools beneath 28.5. So if we head down, the imbalance here seems to be to the downside based off the sub 25K region. But if you look at the ambiguousness within the current price structure, there's not really much on the lowest one is at 29K for the current price tag on the 3-month time frame. So the 3-month and the 6-month are imbalanced to the downside. This juxtaposition makes the time frames not line up exactly right. Same with the 6 months here. You see that larger pool down below, sub 25K, a lot of building liquidity up here. The last time we did that, let's just go back in time. We'll go back on the 2-year chart. So the last time we had this like bit of happiness on both sides here was in November. So we're caught between a rock and a hard place. We had a bunch of liquidity up at, pardon me, 142 billion dollars, and then we had all these pools building below 17K. And what did we do? It was a bull trap, and we came down for that lower low and ate all of that liquidity. So just to note, when you do have large liquidity building on both sides, they end up hitting both sides to a degree. So it could go up and fatigue to a point and come down to that region and eat up all this too. So I wouldn't be surprised if a sharp drop at some point if we make it up into that 32K range. I was kind of expecting there's a hit to that pool up here at some point on the 2-year time frame, because you have $600 billion building up at 33.2 and beyond if you include these $200 billion up to 34K. If we go up here and fatigue off 33.2 and then sharply drop it, that would be something I would see going into the halving occur, and then come back to eat all this down at 24K without giving hesitation or pause. This is very, very similar to this drop back in November, how we went up and we fatigued off some liquidity here and then just boom, came down and ate all that. So that is kind of what I expect to happen when it does make that rise up. When is that going to occur? I have no clue. It could go down, eat some of this first, and then go up. So you got to keep your eyes on the prize every time and not buy into a single narrative. But yeah, the fatigue of the liquidity starts at 33.2 after that $600 billion is reclaimed. So let's go back to the 1 month / 7 day. Those are the two that I like to look at because they show you the pools and without a bias, because you can see both sides here. You see that 17 billion up at 30,005, and you see this 12 billion down at 28.4, and it gives you no bias. It just tells you where the liquidity pools are starting to build on the monthly time frame. Hottest is up at 30,005, so we're here for it in the long off that reaction of the 618. And let's go into the Binance chart and throw on our oscillators and see what's going on. Shout out to everyone here. What's up, CNC Subi guy? What's up? What's up? Let's go into the 12-hour time frame here. Turn this off. So we had this on the Binance chart. Strangely enough, the point of control was not where it bounced off of, but it did have a reaction off of the 618. This is why looking at different charts, you can get different information and not to get stuck into one charting method. I just use it to have different information on my charts. This has my bearish trend-based fib level from this impulse retrace ABC to the downside, and then we took that to the 1 here, and generally that C leg gives you that information of where it would stall, where your entry model would be on the 236, and boom, to that 1 level. And that seems to be where we've been consolidating at that 1 at 29K, getting a little bit beneath it, bouncing off some daily support structure at 28,690, and did that a second time, and then we bounced off there, and now we're reacting off of the local 618. And that's also a 786 of this bearish trend-based fib where you start to reclaim. And the 706 at 29,431 is where the trap door is opened. If they're going to drop it, that's where they would deny this as support and just open the trap door to the downside. So that happened here on Monday, July 31st. As you see, the 12-hour candle went and closed beneath it, and boom, the trap door released all the way down to the 28.5 region. So that's why I call the 706 the trap door, because that's where if it's in a bearish trend-based fib, they open the trap door to the downside. I remember seeing that from 53K all the way down to 41K trapdoor in 10 minutes, like boom. So it's generally sudden when they open it up there. So, and if they deny it, then you see the surge up. So let's go ahead and throw on the oscillators and see what's going on with Momentum Master. Link in the description for more. MomentumMaster.info. Scroll down to features, toggle everything in the suite as it stands, and then we can read each component. The thing that I'm looking at right now is this reclamation of the 12-hour cloud with this thick band here. That's something interesting to note. We talked about last live about the countering positions of the 6-hour cross down event here with this cloud. So this is a bullish signal with the support of the cloud here, and this cross down event of the baselines is a bearish signal. So you're getting juxtaposed signals that are contrary to one another. Not my exact cup of tea for entry, but you got to enter somewhere, right? If you're going to test a theory. So I did this theoretical bounce off the cloud idea because I was seeing this shift in the narrative structure here with this curvature of the volume of the trend cloud, and we're bouncing off the trend cloud here quite nicely off the 618. So if you're gonna line up math, I broke it down for my friend the other day who doesn't trade. I said trading is three things. It's you have the liquidity, and then you have the momentum, and then you have the math. And those three things line up. When you have the liquidity, the momentum, and the math in your favor, that's your confluence for taking the trade. And then that's all trading is really, is just the, if you follow the liquidity, and where, for example, when this 100x guy entered at $145 million and their partners up here, and there was little down below here, that was your clue for a trapped short pool that was going to be targeted. And then you just ride that for whatever it's worth. With the confluence of the math and the volume weighted cloud here, the Heikin-Ashi formula, and the 618 bounce, that was what just captivated me in that moment to take it, holding the point of control area. So let's go ahead and see. We're gonna not get stuck in one idea. Let's look at all of the things and start our descent through the time frames. So if we look at the 3-day time frame, closing in a day, the 3-day time frame, let's start there. 3-day time frame, reset the stochastic RSI. The money flow came beneath the RSI here, so this looks like it's winding up for something. This does not mean it needs to occur immediately, because the last time we had that separation, it did bounce a little bit, but then proceeded to go extremely deeper, and that disparity increased. But the disparity between the money flow and the RSI is something we've noticed over time with our suite, that this builds up into a insertion of the money. And then you get this double bottom off the RSI, and boom, that was a perfect entry model off the weighted moving average here on the 3-day. Also a bounce off the cloud, quite beautiful entry on the 3-day here at 24K, 25K. And we don't have that alignment with the Williams just yet, but you do have double top scenarios here. That doesn't mean not to take it. Here we had this cross down event. We bounced off the super trend on the 3-day / the 618 during the Silicon Valley Bank failure time, and then we came back up for that double top, but that was a beautiful rise to the upside. So the Williams doesn't always have to keep you out of the trade. You do have those double tops, especially in trend-based markets. So we could be seeing this double top and the stochastic rise of the probabilities of the 3-day time frame in a day's time. It's already curving up the KD lines. So interesting to note. And if we look at the weekly time frame, getting that potential bearish cross idea of the Williams here. The money flow is beneath the RSI here, that you could have a stochastic bounce off 50. A lot of times there is a reaction on the 50 level. Here was a rejection off the 50, and yeah, the 50 level here was another rejection, but that was on its way up. Here we broke out above it. You had previous bearish divergence that was playing out for the last few weeks. And if we go to the daily time frame, daily. So the daily time frame had some hidden bearish, it looks like, over the last, on this last peak. This last peak on this blue vector candle, the stop volume rise, drop to the downside. They had two bearish divergence that played out here, basically stopping out the shorts and stopping out the premature longs. So they're trying to play both sides for liquidity to exit, maybe rotating their positions, shifting from short to long, I don't know, but they're taking out both liquidity pools as they adjust. This could be a reaccumulation range. The deep retrace of the Williams with the rising sun event starting to play out here, getting a rise of the average, the EMA average, and the Williams itself approaching the 50 level. Also the leading MACD formula. The interesting thing that was brought to my attention by a Momentum Master user was that the leading MACD formula that goes between all these domains, when it gets to the 0 level, it has like an interesting reaction. So we'll notice at the 0 level, if it gets up to the 0 level, then it will surge. It will either reject off the 0 or surge past it. So we'll keep an eye on that. As of this moment on the daily time frame, you are getting a cross up of the leading MACD. The leading MACD is more sensitive. Most MACD formulas are not bound to a range, so they have thousands of points of disparity between their values. I took the math and compressed it into 100 minus 100 range, so it could be in this framework. Extremely annoying to do, but it was important for me, so I did it. But yeah, this leading MACD formula is more sensitive and as such is leading. So it's like a leading MACD formula that you could also alert to your phone using this. In case you didn't know, you can add that and as a pump and dump when it crosses the MACD lines on whatever time frame you choose. All right, so on the daily time frame, we're getting a pause here, but the money flow is coming together with the RSI at the 50 level. KD lines coming up to potentially cross to go to the upside here with the Williams rising sun event, and you're also holding the baseline cross up. We had a previous fake out cross up, but the baselines are holding. What do I mean by that? Well, here's the point where the helix crossed up. This helix crossed up here, and it insinuated it was scooping the price, and we're starting to scoop the price, and we're still above the second thin line. And another interesting thing to note is that the daily cloud is thinning here, and we're getting thin and curving in a manner here that suggests that this could shift in terms of a falling trend. And the volume when we were falling was not as thick as it could have been. So there are times where it gets mighty thick like this, and this thickness has been tapered in a manner here. Notice the difference. Okay. So are they accumulating here to possibly go back? This is a 𝗥𝗲𝗃𝗃 formula, so the thinness, and this is why the formula is what it is when it says the thin cloud represents weakness or consolidation points. Keep in mind, when the cloud thins, a potential expansion or reversal is in. So we could be in an expansion to the upside. This expansion suggests that there is less sellers in this drop down than there were back here. Okay, so last time you had this thinning, and then we attempted to come back to test that idea, test that theory off the cloud, which was also this point of control, got rejected, and then it thickened up a bit. And this thickening of the cloud is showing you where you find that reclamation, and then coming up above the cloud, and boom. And then this is where you reclaim clouds and show strength at the cloud or weakness at the cloud. And we previously showed one attempt at the cloud and got rejected. This curvature of the cloud on the daily time frame is showing the sign of curvature and potential upside for that idea. If we start to shift our attention to the 22 hour, the 22 hour, 12 hour, and 6 hour clouds are already reclaimed and starting to thicken up, as the time frame is obviously different. We previously had a cross down event here on the 22 that's suggesting that it could continue bouncing. You're starting to see this has not closed just yet. This is the next candle, which could push this off of this fat, thick baseline here. If we look at the B oscillator, the B oscillator is showing that we have some tapering volume here, no interest as of yet. That's to be expected. It's Saturday and Sunday. Money flow is coming beneath the RSI, suggesting you could get a curveball. We saw how that played out on the other side of the equation when this money flow came beneath the RSI here. It did surge up on that idea, so the 22 hour does insinuate that disparity quite nicely. If we go into the 12 hour time frame, 12-hour time frame holding the cloud nicely as well. Once again, that baseline needs to be reclaimed, and this cross down event on the baseline that is possibly occurring. So you need to see something in the next 10 hours that puts us up above this level. Previously, we got rejected off this vector candle equilibrium level, the reclaiming of 50% of the vector, and we came back down. So coming back above this and showing some conviction and negating this potential cross down of the 12 hour is important for continuing more upside. The KD lines getting mighty close together. If we look at the B oscillator and zoom in a little bit further, the leading MACD has crossed down here. Can you get the cross up? Is it going to cross back up here in a similar fashion? Needs to cross up to be bullish, or we're potentially heading down on that. Williams at the ambiguous 50 level, not really showing where it could go. It could just continue higher or lower. There's no real signal there. If we go to the 6 hour, wait, I got to go back to the 12 and look at the cloud in more detail. All right, so looking at the 12 hour, we bounced off the cloud. The cloud is mighty thick. When was the last time we had that type of shift with that reclamation with some sustainability anyway? We didn't have any thickness here, and it was still thin, and that's why it says thinning it means an expansion or reversal, so it's not necessarily reversal only. So it expanded, boom, to the downside, but there was no thickness here. You see, there's a little bit more thickness on this cloud, suggesting there's more volume entering than is being displayed on volume indicators here. So there's something happening with the volume that is showing this shift in the cloud structure to buyers more than sellers. Now, you had that for a moment in time here, this delayed thing, and then we were beneath the cloud, which was strange. I don't know why that occurred exactly, but there was a lot of delayed, probably this volume was expressed back into the future here. This green volume here was expressed over here, I think. But yeah, like looking at where the thickness is reclaimed and sustained, if you look back in time, there's other times where we sustain the cloud and sustain the cloud, and eventually we break down at the cloud. So the cloud gives you these signals where this thickness kind of tells you points where we're going to get bullish order blocks to continue higher. Okay, so let's go back here and look at the cloud one more time. Yeah, so it's just interesting how thick that cloud is and that holding off that 618 reaction. And then the 6 hour time frame also holding and getting thicker from this curvature here, had previous resistance off it, burst up above, held this 6-hour candle above that cloud, and then boom, it surged back up. So if we're going to hold it, we could continue higher. On the 6-hour time frame, previous rejection off of that 0.5. Let's go to the, let me make sure the B oscillator is good. The 6-hour starting to take off here. The money flow beneath the RSI slowly getting reinserted. The MACD still crossed down, potentially getting close together to cross up. The Williams in no position that I see of merit. Looking at the 4-hour time frame starting to play out here. You had hidden bullish divergence off of the money flow here. So this reset of the money flow, lower low on the money flow, higher low on the price action, that's hidden bullish divergence starting to insert into the money flow here. The money's flowing back in. This disparity between the RSI and the money flows coming back in. Now you're seeing the money flow above the RSI, so we need to see some conviction to this move, or it's just holding to drop it, perhaps. The Williams in a nice position on the 4-hour time frame for this zone for a oversold region on the Williams. If we look at the leading MACD, it's flirting with the idea of crossing up more so than the 6 hours, so we could be seeing this cross up shift of the MACD to the upside. This last little bit of hurrah on the 4-hour needs to show some momentum here, or you could get a hard reset of the 4-hour time frame. Let's go into the cloud idea, strangely enough beneath the price action, but in this upward rise idea. Is this a bearish retest of the 4-hour before they break it? 4-hour not showing any signs of life just yet. Struggling to maintain as you get overbought here, not going anywhere. One thing to note is we had 5 time frames oversold about 5 hours ago. I got that alert to my phone using the dynamic alerts, which was why I've remained in the trade thus far. I've been seeing the things lining up with cloud reclamations and all that stuff, saying that it's possibly going to hold here for whatever reason. On the hourly time frame, ambiguousness for a large part of the weekend. Not really clear on this time frame just yet. No clear signal on the hourly. The one thing to note is the reclaiming of the cloud here on this for the last few hours. Basically, we have reclaimed the cloud. The cloud is now beneath price action. Something to note. Going to the 15 Asian range. So the Asian range, for whatever reason, they like to pump it before they dump it. So you can go back in time and back test this. They did this all the time. So here they pumped it up, dumped it down, gave it to London, went sideways into New York, pumped it up. And so they just kind of hold it. They either pump it up slightly and dump it. And rarely do you see this massive pump in Asia. Most of the time dump into London, rise at New York. It's just the way of the world. For whatever reason, Asia has more of a dumpy vibe. So they pump it up slightly to dump it. So are we going to see that occur here on a Sunday, even though all of the banks are closed? And just for note, I'm in Japan. Japan is on vacation, so the banks will be closed for Japan as of Monday. I don't know how many people know that, but we're on a vacation called Obon for a week. So I think Asia will be slower for a week going into next week. Hong Kong is probably unaffected, but they do business with Japan, so it will have a slight effect. Reclaiming the 15-minute cloud here, once again, you could come down and start to see some sort of surge out of there. The reclaiming of the cloud, we reclaimed it here, but then dumped back down out of it on Saturday. Seeing a lot of 5s here. So the last time you see 5s on Momentum Master stochastic array, you know, seeing the 5s and the 6s is generally your signal for getting out of there. Now you can go back and back test this. This is why I turn the history on. It looks a little bit busy, but I do that for my own ability to back test false signals with my eyeballs. Like I could just have this on and ooh, very clean 5 entry, nice, you know, and give you that, but it deletes all the other ones before. So I just like to have everything on the chart so I can see where did it play out. It fatigued off of 2 time frames, oversold or overbought. Here overbought, came down, and you could see the 5s having a reaction, 5s having a reaction, and it's just interesting. And then you could see where that kind of holds on other time frames. We talked about the larger time frames starting to lock these in, and so these being locked in on hourly time frames and above is something you need to take note of. And so having the 5 lock in on the hourly there shows that there's like a probability overextension, that they can't push it lower necessarily on the probabilities of the math. And so that's interesting that the hourly locked in a 5 like that. And then you go to the 4 hour and you're like, did it lock in on the 4 hour? Oh, it locked in a 4. That's pretty interesting. The last time it did that on a 4 hour, it did this. Interesting. And so you just see where they locked it in. And the last time on the FOMC, for example, they had these 5s over here. I don't know if you can see it because of the point of control, the visible range volume thing. Let me delete that. So you had these 5s lock in on FOMC, and I was talking about the higher time frame, and before the FOMC meeting I got juked out of the long idea because of the FOMC meeting, but you would have seen 2% rise off of that idea there. And then that was also setting you up for this larger idea possibility. So that's, yeah, how the stochastic array works, looking at it on higher time frames and where that locks in on the higher time frame. Strangely enough, if you trade stocks and stuff too, this does play out on stock markets. So you do get these 5s that lock in on 6-hour time frames, suggesting a bottom, and boom, and then you get these higher time frame exhaustion points here, and boom, to the downside. So you're now getting 5 time frames oversold on NASDAQ, so you should see a bounce for NASDAQ next week, is what it's saying, just at a glance. And so you're reaching this low, knocking out the liquidity here, and possibly seeing a bounce next week into some of the short liquidity that's opened up here. And so it's quite fascinating. Like you look at ES, I believe there was like a nuke at some point here. Where was it? We're looking at too high of a time frame. Let's go to the 4 hour. Yeah. You had some nukes that suggested the steam was running out here. Yeah. Where was that? But getting the 5 time frames overbought here, and then boom, it dumps down. 4 time frames oversold, surges up. I've noticed that on my 1 minute, even when I'm playing the 1 minute, it keeps me tuned in, let's say, on the other time frames. Like for example, I was seeing this into the PPI meeting, and this line is when the news drop was coming, and we're seeing bullish divergence, 5 time frames oversold, and I was seeing ideas for a long, and that's why I took the long, and boom, it surged up on that micro time frame for 122 ticks. So it's kind of it does play out for the stock markets too, if I do say so myself. So that's just me. The dollar index, let's see what the US dollar index is doing. We're reaching into that level that I had, which is a range high zone / fair value gap. It's over here at 102,943. We were saying, can you come up into that region? We did come to that one level of the bullish trend-based fib level, found that support at 0.65 and bounced up. and we're starting to see, can we go into the range high at 103.421 up here into next week, or is it going to double top back down? On the 6-hour time frame, nothing locked in. Let's see on the 4-hour. No, let's go to the 1 hour. 4 time frames overbought here with the higher time frame exhaustion of the 4-hour and likely the 6 and the 12 with these diamonds here. The diamonds are the higher time frames. So if we look at the 12-hour time frame here, we're going to see some exhaustion, most likely. No, 22. The 22 still working its way out. So you got the daily and the 3-day overbought for the dollar. Does that mean it's going to surge up here for one last hurrah, stop loss hunt rise, and clear out a sell side liquidity zone and then drop for Monday? With the rise idea for NASDAQ and everything, if this goes up and then starts to drop, then they could be reinvesting their portfolio into the lows of other assets that have taken a topple. You've seen a lot of assets drop. For example, you had Apple drop by a fair amount, 3-4%. You had Tesla drop by 3-4% last week. You had, see, even Tesla has those nukes that play out, pretty powerful. And then you have the Google nuke also played out. It's played out here. Nvidia took a topple. Netflix took a topple. Basically everyone took a topple. Gold, they took out their money in gold. I think they invested it back in the dollar. So where's the choice for value? Where are people looking to place their value next? So it looks like gold is starting to create a double bottom off of a fib level for the second time. Could it do a deeper retrace like it did with that wick and reclaim this wick at the 0.65, 0.66 level? Entirely possible for that double bottom idea for gold. If you look at the dollar also topping out, so if the dollar is topping out potentially, then people would be taking their money out of that and putting it into other assets, perhaps going into next week. NASDAQ also reached into that range low. You could see a reactionary bounce up into the liquidity going into Monday, trying to establish some highs. If they're going to go lower, they would establish a high for the week and then establish their continuation idea if they're going to continue into this liquidity down below. If you look at, yeah, ES is very much the same. You would go try to establish some of the liquidity grabs for these buy side liquidities up above. And that's about it for the market update. So if we look at the hourly time frame right now, once again, that 5 locking in was noteworthy to say. What would that be? So hourly and 15-minute is ambiguously holding this range and potentially going higher. Let's go look at the liquidity one last time and see where it goes. So we still have the partner in crime up here at that $145 million mark at 29,753. I'll be looking if it goes to that region to trim and set stops into profit at the bare minimum. And looking at what has been pinged in over the weekend, not really much of anything. There's this guy here. There's a $21 million pool that came in for the longs, nothing for the shorts. So as long as nothing comes in for the longs, the imbalance in the 1-minute time frame is slightly to the upside by 867 million. So they could come up to this guy for the low liquidity weekend idea. Looking at the higher time frame of the 7-day is to the downside, so I'm watching out for that. Monthly time frame is to the upside though, so looking for a potential up to 30,500. But that's about it. low liquidity Sunday games. I'm going to delete this. It did not play out in that same fashion. We did get that hit to that pool though, so that pool got hit, boom, and he was liquidated, so that will be deleted. So we're looking for the reclamation of the cloud idea. This is what I'm personally in the long for, is we got the reclamation of the cloud. So are we going to see a bounce up here? Are we going to see this kind of go up to that 700 region and take out that guy and continue, or not? We'll be here for that either way. This taking out that liquidity pool up here. And that is my story, and I'm sticking to it. Let's see what you guys have to say. If anyone here is new and you want to learn trading on big farms, invite anyone you know in. I've followed this for a long time. He's unique win. Oh, thanks, man. They dumped Nas too. Yeah. All right, guys. Well, that's it for me. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. So thank you for doing your part, and I'll do the same. Bringing the fire, the accuracy, the precision, all that fun stuff, and I'll catch you on the flip side. Peace.